What's going on, everybody? My name's Jeremy, and this is a familiar face to probably most of you.
Some of you.
A good amount of you. My brother, Johnathan Scott, the legend. A lot of you that do know him, this is my brother. We've been close for quite a while. What's neat, too, is getting to see my two sons that are the oldest are a lot like him and I, big time, and constantly remind us every time we're around him. But anyway, that's not what we're here to talk about. This is the second episode of our lending testimonials, and again, a lot of people reach out and are just like, what the heck is it? How does it work? So we thought it would be a good idea to bring on one of our oldest lenders who's been lending for quite a while.
2018, 2019. I think is when it started. Yeah.
You and Calvin, I believe, started at the same year.
Okay.
And he was 2018. So
that sounds about right.
Yep. Yeah. You guys are, and again, I just want people to see, like, these aren't just old, rich, white people wearing suits. It's young people who are active, successful. All Aggies are successful. We know that. We're both Aggies.
Yeah.
So, but just getting there and putting their money to work for them. But again, what we talked about in the last one is the security and the collateral, etc. We'll get into that. But just like I did for Calvin, give us a 30-second spiel of who you are and how you got into it.
Okay. Johnathan Scott, like you said, Jeremy's older brother. I'm a right-of-way supervisor for energy companies, all across the U.S. As I built up, extra money on the side, have wanted to put that to work, and have felt that there's really no better way to do so than with the security of real estate flips, especially in the DFW Metroplex, where people continue flocking to. Not only a lot from California, but they're really coming from all over the country to this area. So just keeping that money parked in a savings, or too much money parked in a savings, you're really losing money by not putting it to work for you. So
especially when they print more money for Ukraine, like they're working on now. They've already done 2 bills. That adds inflation. Yeah. So it makes
more spending.
What he's saying is leaving it in cash. It's just it's devaluing. It's not earning money. I mean, there are certain things you can do to get, treasury bonds and whatnot, and make better return than 0.10% literally at Wells Fargo. But this is a return that is anywhere from 3 to 4 times that amount, consistently. So, and that's kind of the theme of what Calvin had mentioned, is the consistency of it compared to the stock market. So, I know him and I both love to talk stocks, own the same stocks. On some are good for him, some are good for me. I still own ET, actually.
Couldn't keep you in Halliburton.
Those were some success ones, but we are getting hammered on SoFi. But never realized unless we sell it.
Yeah.
So buy and hold forever. But I would say, how many deals do you think you guys have done?
Been 2 to 3 a year for the past 5 or so years. I'd say anywhere 12-ish, probably 10.
Double digits for sure.
Yeah. Oh, minimum. Yeah, 10 minimum.
Definitely.
Possibly 12. I don't think quite 15. But
nice.
Yeah.
Which is a good amount.
Yeah.
Calvin and them were. His father-in-law does it too. They were at like 24 exactly. I think it was. Good so again, 2 people in these investments. That's constant. Deployment of capital is huge, because it's not earning interest and compounding unless it's deployed.
Yep.
And a common theme too is compare. What I love to just ask is compare this asset and its security and collateral, if you will, with your other investments, because he's we were talking about on the last video, is doing random things that are non-secured. He has them as well with why don't you tell them some of the investments that you're doing, and just kind of the difference of the collateral and why you diversify.
Sure, yeah. So obviously, from where I stand, my viewpoint, always be, if you have the opportunity in your career, continue to contribute to that 401k if your company has it. That's the smartest long-term play there is. You continue doing that, you let that build, but once you get to a certain spot in your career, you start having excess that you're not, necessarily sure what to do with, and putting that to work for you instead of parking that completely in a savings account, making little to nothing. There's some other savings accounts out there that make a little bit more. Online
1-2%.
savings account only, yeah, you're looking at 2, maybe 3% tops, but still in this, each deal, on a yearly realized annual basis, 2 to 3, sometimes 4 times more, depending on the deal. But yeah, we in our company, JC Capital, we also do some film, investments as well for movies here and there. Again, it's nice and has some residuals, but there's nothing like cut and dry secure as getting in a real estate deal, especially in the DFW Metroplex with Summit Cove Realty.
You know what was interesting that Calvin mentioned? I didn't even notice. He said the industry standard is 1% default rate.
Okay.
On these type of hard money loans, and reason being is there's so much equity to be lost if you do it. And one other thing he mentioned too was like, I've surveyed and talked to people who have actually had to foreclose and been at 1%, and he goes, 100% of them made more money than if they would have just got the regular situation.
Yeah.
So it's the bank of John and Casey Scott. It's what they're becoming. They you buy Halliburton, it goes up, You buy SoFi, it goes down. You don't get to reclaim that capital.
Yep.
And what's very interesting is the tax write-off situation. Is you can only claim $3,500 on your per year tax return. You bet your bottom dollar I've lost more than $3,500 many years in the stock market.
Not been able to fully write it off.
Yeah, I mean, I'll probably go the rest of my life not even be able to write the rest of that off. But my point is, it's just nothing's more secure than the real estate collateral when purchased correctly. You got to, we're brothers. It's helpful. You got to trust who you're lending with, but even more so, you need to know the asset and know the underwriting, because I know the hard money lenders that I know that are high up in the game, they will lend to a 400 credit score, but they'll make them put 50% down.
Sure.
So they to them it's capital
too.
and collateral.
Yeah.
That's the two things that they do. So what's nice here is we get our properties deeply discounted, so it provides that loan to value ratio that keeps their money safe, while we're working on the property.
Yep.
And Daniel's sitting right over here. Well, we got quite a few doozies to go over. It's the third day of the year. We just found out a home is on a septic tank, and in the middle of Haltom City.
Built on a septic tank?
Well, it's on a septic in the middle of Haltom City.
Oh, okay.
Had an inspection and everything, and nobody saw it.
I see.
Doesn't even make sense. But again, that's one of the problems with the rehab. If you watch our other videos, you'll love those and find all those problems. But this is the quiet part. Look at how relaxed and no stress, no wrinkles he has. Daniel looks like he's 45. He's 24. I'm just kidding. But like I said in the last video, this is the quietest business, is the way someone's put it. The quietest business they run, because you send a wire. He tries not to get frustrated with title people, and then he gets a wire.
No comment.
It's pretty much that simple.
Yeah.
That's kind of
it is. It's that easy, making a phone call or two, getting wires set up, and then just getting the title company the information they need to get your money back to you. It's that simple. And I mean, boring passive money made is the best money to make.
Yeah. And most consistent, because right now the stock market is down 20% last year, 22%.
About 20,
Yeah, I mean,
401k,
how does that bake into the last average 10% returns? No, you
got to look long term, but
I promise you, your financial advisor isn't talking about that. But we are. Like I always say, I do it. I do the same 401k. If you're not selling it right now and you're dollar cost averaging, this is awesome buying opportunities.
Yep.
But
think long term stock market wise, this is your extra capital.
definitely.
Put it to work.
And then if you're retired, think about this though. What if you're retired last year at the January?
Mm-hmm.
It went down 20%. Your nest egg you were banking on, and you had no other vehicle to lend on. It's kind of scary.
They're in a rough spot. Yeah.
So it's constant diversification is key. This is one merely tool, but what I've discovered years after the banks have is that this is the safest way to compound interest on your money. That's why the banks don't buy rentals. They don't. If you think about the concept of a bank, they take our money, they pool it in one spot, and they lend it out, and they make interest on our money. They're not buying stocks with that money, and they're not buying rentals. They're creating mortgages, and they're foreclosing on the house if you don't pay it, so they can get that money back and technically keep all of our money safe. And then they're only paying us 0.1%, but that's besides the point. Anyway, that's kind of the meat and potatoes, and we don't like to make these go super long because everybody's attention span nowadays is that of the dog on Up. But so any what I always love to ask is, what's some parting wisdom that you can lay on us? Some parting words of wisdom.
Parting words of wisdom
for the millions of people watching.
Well, yeah, I'm not big on overly inspirational stuff, but just stay consistent. Like in life, don't always be trying to hit the grand slam. Do what you do in life. Be good at what you do, and then you can create multiple streams of income after you become very good at what you do. That's all I got.
Definitely, and that's awesome advice because two guys from the same loins. He put that perspective to the T from the time he was in middle school to high school. And my behind's over here just trying to get rich quick in the stock market day trading. And I've lost so much money doing that. But I learned a ton, and it's been a worthwhile journey.
He's learned the school of hard knocks a bit on that.
Just paid for a Harvard education, Stanford, something like that. But that's it. Well, that's all we have for today. So appreciate you guys listening. Thank you guys for taking the time to come. Of course.
Yeah. Thanks for having me.
They live in Pennsylvania. They've been in town. They're literally doing this and then leaving town. So appreciate it, man.
You got it.
We'll be here next time. Thanks for listening.
Right.
Bye.
Bye.